All right, it's National Tax Day. Actually started back during the Civil War in 1862, and then, well, it was constitutional, so we had to get rid of it, and then brought it back in, I believe, 1910? I don't know. It seems like it happened just a couple of years before Titanic sank, which sank on this date back in 1912. Whether or not taxes and Titanic are related, I'm not sure. What I do know, though, is we're running towards the finish line on our markets. Let's go to the corn market right now. And the old crop still May and July in the red, with the front month off 3.5, 481.5, and December at 464.25. It's 2.25 higher. What about soybean trade? Well, soybeans are in the red, down a penny at 1027.5. Soy meal contracts are lower, and soy oil contracts have been higher for the entire session. Wheat market, we're in mixed territory, but mostly lower. July is 5.5 lower, 556.25. Hard red, July 2.5 lower, 567.75. Spring wheat, December unchanged at 647. Cotton market in New York is 65 points higher, 67.59. Let's go to Chicago. Vice President, Zaner Ag Hedge, Ted Seifried. Ted, as we look at what's happening in the markets, not a whole lot of news at this point, is there?
Well, look, when we've been trading the bigger picture news for the last couple of weeks, it definitely does feel like a quieter time in the markets for the moment because, you look over at what stocks are doing and what, like, say, crude oil or gold and things like that are doing, and it's not as active as it has been. But I will say we've got a decent amount of grain news at the moment. I mean, we had Norfolk Crush today, which came in well below expectations. Soybean oil stocks in particular came in well below expectations, which is where the strength in soybean oil is coming from. And that's lending some strength to soybeans, although they have been kind of fading off of that initial bounce that they got. And then, we have our typical this time of year planting progress. And it's way too early to get too into those numbers, but we are at or a little bit below the 5-year average kind of across the board. So that was, I think, mildly supportive coming into today. And then, finally, we had a announced sale of 110,000 metric tons of corn for delivery to Portugal, which does kind of highlight how our currency advantage or the recent weakness that we've seen in the dollar is being reflected in being competitive on a global scale for both corn and soybeans at a time of year where we're not normally, at least not, certainly not for soybeans. So you've got a lot of things that are kind of happening in these markets. Some of them, typical, planting, things like that, crush, and some of them atypical, right? Like how that dollar is moving and how it's affecting our export window, and where we end up going from here, from a global economic standpoint, from a domestic economic standpoint, from a trade relationship standpoint. There's a lot of unknowns that we have in the bigger picture versus a lot of the typical this time of year grain fundamentals. So we're trying to balance all of that, and I think it's nice to have a little bit of a quieter day from time to time when we've been as volatile as we have been for the last couple of weeks.
Yeah, we're looking at gold right now moving in higher territory. We're off of the day's highs, 32.18. We're at 32.16 right now. And the silver market is moving higher, trying to make it 7 consecutive sessions in higher territory. Let's take a quick break. We'll come back and we'll talk livestock futures. Market Day report continues in a moment. Still asking prices in the South at 210. We'll have to wait and see what happens with live cattle this week. Remember, in the South, packers just had a hard time, couldn't get them bought at 204. So we'll see who wins that standoff this week. Live cattle futures are higher, up $1 on the April at 204.95. We have popped above 205, but have come back off of those highs. June contract earlier this morning hit $200, but We backed off 199.92. That's up 85. Now to the feeder cattle market, and the April contract at 289.42. That's a buck 37 higher, and the May contract at 282.72 is a buck 80 higher. What about the hog trade? What's happening there? 30 higher on the front month. June up a nickel, and July is a couple of pennies higher. Let's pop over to the energy markets with crude. Now down 17 at 61.36. That's the May contract. What about gasoline? Gasoline futures are moving higher. The diesel market? Diesel is in the red, and nat gas futures are higher as well. Let's roll over to the equity markets now, and the Dow moving lower. NASDAQ is in higher territory, and the S&P, we bring that one up, is lower as well. Let's go back to Chicago. Ted Seifried's with Zaner Ag Hedge. There's a good-looking Ted. As we wrap things up on the proteins and energies, how would you do that?
Another solid day there for cattle complex. In particular, look at the feeder cattle. We closed that gap that we had from the beginning of the month. When we technical traders really look at gaps pretty closely. And when you go up and get into a gap, we want to see how we act when we get there. A lot of times we'll say, in a bear market, if the market breaks lower, leaves a gap, it goes up and partially fills the gap, but doesn't completely fill the gap, that's a really bearish sign. But we did completely fill that gap in the August feeder cattle. So to me, that looks pretty good. I do feel like it wants to go back and test those highs, but a lot of that's going to depend on what happens with the stock market and everything like that, which is really kind of in a holding pattern today. So what does tomorrow bring in the equities? That could have a very profound impact on what happens in the cattle complex as well. So here too, we are chasing headlines. We're waiting for the next shoe to drop, whatever that might be. Tariff news has been kind of positive here for the past since the end of last week. So if that continues, then maybe we do have some more upside potential there in the cattle complex. But who knows, Tony? That can change at any time.